Donald Trump has upended the world economy, plunged markets into chaos and sent shockwaves through the stock markets. But what does it mean for you? I'm Ashley Armstrong, business editor here at The Sun, and we're going to break down how Trump's trade policies can affect Brits. So a trade war has been kicked off by Donald Trump's return to the White House and his fondness of inflicting tariffs on other countries. Remember, just before he came to power again, he said that he thought that tariffs were the most beautiful word in the dictionary. Tariffs are taxes charged on goods imported from other countries, and they're usually a percentage of an item's value. So Trump is using tariffs to address what he thinks is an unequal balance in trade and the answer to strengthening the US economy. He reckons by encouraging international companies to invest more in America by building factories where there won't be tariffs or boosting US production. And it will give incentives to Americans to buy more homegrown products because they should be cheaper without tariffs. In just a few weeks, he's introduced a 25% tariff on imports from Mexico and Canada, a 20% levy on Chinese goods, and now he's threatening a 200% tariff on alcohol, including wine and champagne, if the European Union goes ahead with a 50% tariff on US bourbon. It's a real tit-for-tat spat. He's also introduced 25% tariffs on all steel and aluminium imports, which has also included the UK production. Unfortunately, as a result of these tariffs, we will most likely see higher prices, even on British goods that aren't directly affected by tariffs. This is because any disruption in global supply chains and extra costs will ultimately feed through to consumers in higher prices. We've seen warnings from everything including Barbie maker Mattel to trainer brand Adidas warning prices will be higher. And the UK relies heavily on imported goods for all industries, and manufacturers are already telling industry groups like the British Chambers of Commerce that there's going to be serious concerns about inflation creeping back in. However, there is a little bit of hope that the UK could benefit if some countries end up exporting less to the US to avoid all the tariffs and lower their prices to other countries, like the UK, to sell more to tariff-free countries. So far, Britain has been in one of the safest spots as the trade war has raged on between the US and the EU, Canada and China. We've somewhat been sheltered from all of that. But the UK had been hoping for exemptions from steel tariffs as industry is already facing enormous pressures. But so far, that has not been granted by Trump, who's instead opted for a global blanket levy. We know Jonathan Reynolds, the UK's business secretary, is on his way to Washington next week to try and sort that out. What could it mean? Well, Britain exports around 9% of the steel it makes to the US already, worth around £370 million a year. Much of that is specialist steel that is needed in defence and mining and construction. There's some hope that actually those US companies will need the steel for their specific purposes and end up having to pay over the odds anyway. But some steel companies have told us that they've already seen halted or delayed orders amid huge uncertainty. Some firms are more vulnerable. There's one Italian company with a massive site in Sheffield which exports a fifth of its products to the US. The steel tariffs could end up impacting the cost of cars, cans, tinfoil and the construction of wind turbines and infrastructure projects, including Heathrow's third runway, if that goes ahead. Brits could also be affected if their financial investments or their pension pots have been affected by the dramatic swings in stock markets. What we've seen in the past week is the usual safe powerhouses of US tech stocks having heavy falls as traders are trying to respond to what the market is going to look like in a post-Trump tariff era. The huge uncertainties that's been caused by Trump announcing trade policy virtually over X is hugely unwelcome as businesses struggle to take bets on investing or hiring, but they don't know what's coming next around the corner or what they're going to wake up to. If Trump does manage to broker a deal between Russia and Ukraine and there is peace then that could have a massive impact on energy prices. Russia's invasion of Ukraine, after all, was the single biggest factor in sparking the global energy crisis as gas resources became weaponized. Britain was mostly spared blackouts during the height of the crisis because winters weren't just as cold as they have been in the past, so demand for heating was lower, and we relied heavily on European imports of gas, where there's bigger storage. Meanwhile, in Britain, we're still at a crossroads with the highest electricity costs in the world, largely because we've got an archaic grid structure and we still rely heavily on imported gas. The problem we face in fixing this issue and the race to get cheaper bills is the clean power push wanted by Ed Miliband has lots of upfront costs. Meanwhile, while the government is promising we'll all see cheaper bills, it will take a while to happen.